Last week, I did something I've only done twice in my investing career. I put 10% of my entire portfolio into a single stock. Not tech, not AI. A bank. A Latin American digital bank that most investors have never properly analyzed. I am Tom from Alpha Trades. Since 2021, my portfolio is up 440% while the S&P gained 62%. I don't share that to brag. I share it because what I'm about to show you could be the single best risk-reward setup available in the market right now. Warren Buffett owns $1.4 billion of it. The founder has never sold a single share. And in the next 12 minutes, you'll understand exactly why smart money is betting big, while retail investors sleep on this opportunity. This is NU Holdings, and the clock is ticking. Let me paint you a picture. 650 million people. An entire continent. Half of them don't even have access to a bank account. But that's not the real crime. The real crime is what happens to the other half. In Brazil, a basic checking account costs 30 reais monthly. Sounds reasonable. That's 10% of minimum wage. Imagine if Bank of America charged you $500 every single month just to hold your money. How do they get away with this robbery? 5 banks control 85% of Brazil's financial system. They've carved up the market like a cartel. Customer satisfaction? -20. Yes, negative. Brazilians literally hate their banks more than root canals. Then in 2013, everything changed. A Colombian ex-Sequoia investor named David Velez looked at this broken system and said, "I'm going to burn it down." Everyone told him he was insane. The regulatory barriers alone would cost hundreds of millions. Today, that insane startup has 107 million customers. More than JP Morgan, Bank of America, and Wells Fargo combined. They're adding 1 million more every single month. The cartel isn't laughing anymore. Look at this revenue trajectory. 155 million to 6 billion in 7 years. That's not banking growth. That's monopoly disruption. And here's what Wall Street doesn't get. They're only 15% penetrated. 15%. But Tom, everyone can grow if they burn cash, right? Wrong. Watch these economics. Customer acquisition cost? $7. Lifetime value? Over $1,000. They serve each customer for 80 cents monthly. Traditional banks? $25. This isn't disruption, it's annihilation. Here's the exact moment I knew this was generational. Q2. 2025, NU captured 28% of all new credit cards in Brazil. In 1 quarter. Think about that. A 12-year-old startup taking more market share than banks that have operated for a century. The cost advantage is permanent. IDOU spends $22 per customer maintaining branches built in the 1950s. NU spends 80 cents running everything from AWS. It's like watching swords fight machine guns. The old world is already lost. 0 branches, 0 ATMs, 0 tellers. Just pure cloud infrastructure processing millions of transactions. Every decision powered by AI. Every customer interaction optimized. This is what banking looks like when you build it from scratch in 2013 instead of 1913. Q3 just dropped. Revenue up 42% to $4.2 billion. Net income up 41% to $783 million. They're printing 40.8% margins with 31% ROE. These aren't fintech numbers. These are monopoly-level returns. Look at this margin expansion from 27.8% in 2023 to 40.8% in 2025. That's a 13 percentage point jump in just 2 years. Each percentage point adds $60 million in pure profit. This is what happens when digital infrastructure meets massive scale. While everyone's obsessing over Brazil, NU quietly entered Mexico in 2020. Same broken banking system, same exploited customers, but this time they know exactly what they're doing. 0 to 13 million customers in 5 years. But here's the kicker. They're moving twice as fast as Brazil. What took 8 years in Brazil is happening in 4 years in Mexico. The playbook works. The moat is real. They already own 9% of Mexico's credit card market. BBVA, which has been there for 90 years, 15%. At current growth rates, NU becomes the dominant digital bank by 2028. That's 36 months away. Right now, Mexico loses $50 million per quarter. But watch the trend. Losses shrinking 35% quarterly. Management just guided break-even by Q4 2025. That's 3 months away. 3 months. When Mexico flips profitable, it adds $300 million to annual earnings by 2027. That's 15 to 20 cents per share from a country they entered 5 years ago. Wall Street models don't even include this yet. Last quarter, 1 out of every 4 credit cards issued in Mexico was NU. 1 out of 4. The Mexico story alone justifies a higher multiple. But there's a third catalyst most analysts are completely missing. 2024, NU acquires Hyperplane, an AI company, and deploys it across Brazil. What happened next even caught management off guard. This is where the story goes from good to great. Market share jumped a full percentage point in 1 quarter. In banking, that's the equivalent of adding 5 years of traditional growth in 90 days. The AI wasn't just optimizing, it was transforming the entire business model. Here's the magic: 127 million customers generating billions of data points. Every swipe, every payment, every late fee. The AI sees patterns that would take human underwriters decades to understand. It makes credit decisions in milliseconds and learns from every single transaction. Real example: customer has steady income but seasonal spending. Old bank, fixed credit limit, one size fits all. NU's AI dynamically adjusts limits based on cash flow patterns. Defaults drop, satisfaction soars, revenue jumps. This level of personalization at scale is impossible for traditional banks. Average revenue per customer was growing 12% annually. Post-AI deployment? Now accelerating to 24-28%. That's an extra $2 billion in revenue by 2027 that wasn't in the original plan. The moat is self-reinforcing. More data makes better AI. Better AI attracts more customers. More customers create more data. Competitors can't break this cycle even if they wanted to. And they're just getting started. Brazil credit cards? Check. Now rolling out to Mexico. Then unsecured loans in 2026. Full deployment by 2027. Each expansion multiplies earnings power exponentially. Now let me tell you about the least sexy, most profitable part of this entire business. INSS secured loans. Government-backed payroll loans where repayment comes directly from paychecks. Zero default risk, 15% margins. It's literally a money printer. This portfolio is exploding. $2.5 billion to $4 billion today. Growing 200% year over year. They're capturing an 8% share of a $50 billion market. The runway is massive. Every billion in INSS loans drops $150 million straight to profit. As this scales to 8 to 10 billion by 2027, it adds 200 basis points to overall margins. The best investments are often the ones nobody talks about. So we've got Brazil printing cash, Mexico about to flip profitable, AI accelerating revenue per customer, and INSS scaling up. Now comes the question every smart investor asks: what's this actually worth? First, safety. 10.6 billion in cash, zero debt. Capital ratios 3 times regulatory minimums. This isn't some over-leveraged house of cards. This is a fortress that can weather any storm. Compare NU to the competition. PayPal has 16% margins growing at 8%. Block has 5% margins with single-digit ROE. NU, 39% margins, growing at 49% with 31% ROE. 10 times faster growth, double the profitability. Yet they all trade at similar multiples. The market is completely mispricing this opportunity. Here's the trajectory: 58 cents this year, 78 cents next year, over $1 by 2027. That's earnings doubling in 24 months. Find me another $70 billion company growing this fast with these margins. I'll wait. The current price is $15.89. My 2027 fair value is based on earnings per share of $1.10, multiplied by a price to earnings ratio of 25, which gives us $27.50. Discount that back to today at 12%, and we get $22. That's 38% upside. Clean, simple, conservative. Why is 25 times PE fair? Start with Visa at 30 times as our baseline. Subtract 5 points for emerging market discount and regulatory risk. You get 25 times. For a company growing over 30% with 31% ROE, this is not generous. This is conservative. Bear case: Brazil slows, Mexico delays. Stock hits $18, still up 13%. Base case: plan executes, we hit $22, up 38%. Bull case: all 3 catalysts hit early, $28, up 76%. This is what asymmetric risk-reward looks like. Maximum realistic downside? $12 down 21%. Upside to target, 38%. But if execution is perfect, this could be a $30 stock. Would I risk 20 to make 40? All day long. Let's talk about what keeps me up at night. Brazil recession? 20% probability. Mexico regulatory curveball? 30%. Credit cycle turning ugly? 15%. Mercado Libre going to war? 10%. These are real risks. But here's why I'm still sleeping well. That 10 billion cash fortress can survive any recession. They're diversified across 3 countries now. AI underwriting is best in class. And with 127 million customers, they have serious political capital. Banks this big don't get shut down. So why am I pounding the table today? 3 catalysts converging simultaneously. Mexico profitability in 90 days. AI rollout accelerating this quarter. INSS inflecting higher. Right now. By the time this shows up in consensus earnings, the easy money will be gone. And I'm not alone. Berkshire owns $1.4 billion. Sequoia is in. Tiger Global's in. Tencent is in. When Warren Buffett parks $1.4 billion in a Latin American bank, that's not a trade. That's a conviction bet. Step back. Zoom out. See the forest. A $1.5 trillion banking market. Being disrupted by a company with permanent cost advantages. Growing 50% annually. Generating 40% margins. With a decade of runway ahead. These setups don't come often. My track record, 440% returns versus the market's 62% since 2021. I've built my wealth finding companies like NU before the crowd arrives. This is exactly that moment, right now, today. Want more deep dives like this? Follow Tom Alpha Trades on X. Visit tomalphatrades.com for my complete research library. Join thousands of investors beating the market with better analysis. Standard disclaimer, this is analysis, not advice. Do your own research. Past performance isn't future results. Invest responsibly.